From October 2025, the FCA has lifted the ban on UK retail investors buying crypto exchange-traded products, or ETPs, for the first time. That means you can now gain Bitcoin or Ethereum exposure through your normal investment platform, just like a stock or ETF. But there are still risks, restrictions, and some big misconceptions. In this video, we'll look at how these crypto ETPs work and whether they're right for you. Today's video is sponsored by WisdomTree, one of Europe's most established providers of exchange-traded products. What is a crypto ETP? Well, this is a security that tracks the price of a cryptocurrency, such as Bitcoin or Ethereum, and it trades on a regulated stock exchange, like the London Stock Exchange. Most of them are physically backed, meaning that the issuer holds an equivalent amount of crypto and it's held in cold storage with a regulated custodian, such as Coinbase Custody or Fidelity Digital Assets. They're designed to make crypto investing simple, transparent, but also accessible through your regular brokerage account. So why are these ETPs and not ETFs? In the UK and the EU, exchange-traded products, or ETPs, are the broad category that includes ETFs, ETCs, and also ETNs. What they have in common is that they're all traded on regulated exchanges, that's the ET part of their name, and then the last letter makes a lot of difference. F stands for funds, C stands for commodities, and N stands for note. Under UCITS rules, single asset ETFs are not allowed, so you'll never see a Bitcoin or Ethereum ETF. Instead, crypto exposure comes via an ETN, a type of ETP that's more flexible. It can track commodities, precious metals, or cryptocurrencies. Operationally, it behaves much like an ETF. It's listed, it's tradable, it's transparent, but legally it's structured as a debt security issued by a company that promises to pay the return of an index. Normally, because an ETN carries the issuing company's credit risk, that would be a concern, but as we'll see, that risk can be mitigated. Why not buy crypto directly? Well, buying crypto directly means dealing with cryptocurrency exchanges, wallets, and private keys. Now, there have been some spectacular failures in unregulated cryptocurrency exchanges, with FTX being the most recent and large collapse. There have also been many cases of people losing all of their money as hackers got hold of their private keys, and that could be by hacking their computer or maybe even stealing their mobile phone. A crypto ETP removes that complexity. You buy it and sell it in the same way as you do for all of your other investments, and that's on your investment platform. And you hold it in your investment account, and the issuer handles custody with professional regulated providers and institutional grade security. It also removes much of the counterparty risk you'd face on unregulated crypto exchanges, as long as the ETP's assets are ring-fenced and bankruptcy remote. Now, whether the ETP is bankruptcy remote from the fund manager is something that's definitely worth checking if you're considering buying one of these crypto ETPs. This video is sponsored by WisdomTree, one of Europe's most established providers of exchange-traded products. When you're comparing crypto ETNs, what really matters is trust and structure. WisdomTree has over 20 years of experience managing physically backed ETPs with around 130 billion in assets globally. They launched their first physical Bitcoin ETP back in 2019, so this isn't a newcomer, it's a proven, regulated provider. It's worth considering that you should not invest unless you're prepared to lose all of the money you invest. This is a high-risk investment and you should not expect to be protected if something goes wrong. Each WisdomTree crypto ETN is 100% physically backed with no coin lending. The underlying Bitcoin or Ethereum is stored offline in cold storage using a dual custody model with Coinbase and Swissquote. Both of those are regulated custodians. Assets held are covered by insurance facilities, and Coinbase's insurance is one of the largest crypto insurance facilities in the industry, protecting against theft or mysterious disappearance from hot or cold storage. Swissquote also maintains an insurance facility for its custodial services. The products use a bankruptcy remote structure, meaning investors' crypto assets are ring-fenced and held separately from WisdomTree's or the custodian's own balance sheet, an extra safeguard if the issuer or custodian were ever to fail. Both their Bitcoin and Ethereum ETNs are listed on the London Stock Exchange and available in pound sterling as the trading currency. These products mentioned are available on most major investing platforms, with fees among the lowest in Europe. The physical Bitcoin ETN costs 0.15% per year until the end of 2025, then 0.25% from January 2026. The Ethereum ETN is 0.35%, with part of its Ether staked to earn network yield, without any lending risk. For investors seeking secure, transparent, and low-cost crypto exposure, WisdomTree's ETNs stand out. Learn more at wisdomtree.eu/crypto and see the description for more information. How does the ETP track the price of crypto? Well, some ETNs simply come with a promise from the issuer that the principal value of their notes will match some index. However, most ETPs issue and redeem their shares through a creation and redemption process, and that ensures the value of the fund tracks the index. Authorized participants, which are usually large financial institutions, can exchange Bitcoin or Ethereum for new ETP shares. That's the creation process. Or they can redeem their shares for the underlying crypto, and that's called redemption. Now, that mechanism ensures that the market price stays close to the value of the underlying crypto, just as with gold or commodity ETPs. Now, if the two do get out of line with one another, the authorized participants buy the cheaper one, crypto or the shares, and sell the more expensive one to bring the prices back into alignment while locking in an almost risk-free profit. It's good to be an authorized participant. So when Bitcoin moves, an ETP with this creation and redemption process follows almost one for one, minus fees of course. Now, a notable point here is that while Bitcoin trades 24 hours a day, 7 days a week, the ETPs will not do that. They'll only trade while markets are open, and that means you can't benefit from 24/7 trading with one of these instruments. So I think to understand this creation redemption process, it's really helpful to track a pound as it leaves your bank account to see how you can go about buying an ETP. First, you pay your pound to your investment platform or broker. Your broker then pays that pound to an authorized participant. The authorized participant then uses that pound to buy some Bitcoin from cryptocurrency market makers on a crypto exchange. The authorized participant then delivers the Bitcoin into the product's cold wallet and receives a share of the product in return. The shares then pass to the broker, who holds it in a nominee account on behalf of us, the buyer. Now, when the investor sells, everything goes into reverse and the shares converted into money based on the current market value of the Bitcoin minus the cumulative management fee while the buyer had ownership of the share. How easy is it to buy or sell an ETP? Well, crypto ETPs trade on the London Stock Exchange during normal market hours. Here you can see WXBT, the WisdomTree physical Bitcoin ETP on the LSE. The price is quoted in GBX, which is pennies, so the price here is just over £18 per share. Liquidity is provided by market makers, so you can buy and sell throughout the trading day at near market prices. You don't need a special account or wallet. It's just like trading any other security which trades on the London Stock Exchange. What if the ETP is delisted or wound up? Well, if a crypto ETP is delisted, the issuer will usually sell the underlying crypto and pay investors their cash value. It's not ideal, but you wouldn't lose your asset simply because the product closes. You'll receive the proceeds in your brokerage account. What if the issuer goes bust? Well, remember that ETNs are structured as debt securities, so technically you're exposed to the issuer's credit risk. If the fund manager enters bankruptcy, the investors are in the queue with the other creditors to get their money back through sale of the company's assets. If you buy a crypto ETN, you're technically lending to the issuer, but most UK listed ETNs are built with what's called a bankruptcy remote structure, and that's to protect investors if that company ever fails. Here's how that works. The crypto is held by a special purpose vehicle, or SPV, which is legally separate from the parent company. Authorized participants deliver coins in kind to cold storage accounts, and these are held by the custodian purely for the ETP. The coins sit in segregated cold storage wallets with regulated custodians, and this is often under a dual custody model for extra security. Some custodians also have insurance to partially indemnify their crypto holdings in case they're hacked. If the issuer itself went insolvent, a trustee would take control of the SPV's assets, liquidate the crypto, and distribute the proceeds to investors according to how much of the fund they own. Because the structure's bankruptcy remote, those assets are ring-fenced and don't belong to the issuer. That means that investors keep their direct claim on the underlying Bitcoin or Ethereum. The process could still take time, but the goal of this design is simple. If the issuer fails, your crypto backing should remain intact and also recoverable, unlike funds trapped on collapsed exchanges. Which platforms will offer them? From October 2025, UK retail brokers could start offering these products, and that's provided they apply the FCA's restricted mass market investment tests. This means platforms will ask you a few questions which you have to answer correctly. They also have to show risk warnings and also impose a 24-hour cooling off period before you can buy. You also have to agree not to hold more than 10% of your net assets in cryptocurrency ETNs. So what we're seeing right now is that the more innovative platforms have rolled out their ETNs already, with larger online brokers following suit later on. But in order to do that, they have to get these new procedures into place. Now, I've been through this process. It was fairly painless, and now I own a small amount of a Bitcoin ETN in my fund stocks and shares ISA. Can they go in ISAs and SIPs? Well, yes, but partly. From 8th of October 2025, crypto ETPs were eligible for SIPs and initially stocks and shares ISAs as long as your platform allowed it. Then from April 2026, they'll be reclassified to fit within innovative finance ISAs instead. Now, HMRC may revisit this later as the market matures, but for now, that's the expected path. And I think that's far from optimal. It would have been much simpler just to stick with stocks and shares ISAs. Are they covered by the FSCS? No, there's no Financial Services Compensation Scheme protection for crypto ETPs. If the price collapses or the issuer fails and it's not bankruptcy remote from the ETP, you could lose your full investment. That's why the FCA classifies them as high-risk investments under the new regime. What are the costs? Well, management fees vary by issuer. Those fees cover secure custody and administration. On top of management fees, brokers or investment platforms may add trading commissions, and of course some brokers will charge you a holding fee simply to hold the funds that you own. And you'll have to pay the bid offer spread, which is the difference between the buying and selling price of the fund. However, if you're not trading frequently and it's a large fund that's very liquid, it's likely to be a tiny bid offer spread anyway, so that would be a fairly small cost. How does this fit into a portfolio? Well, crypto ETPs can add diversification, but they're extremely volatile, and they don't generate income unless they explicitly offer staking, and then payments are in the cryptocurrency itself, not sterling. There's a huge amount of narrative about cryptocurrency, but as usual, I'd say focus on the numbers and not the narrative. If we look at the correlation of daily returns between Bitcoin and other asset classes since the beginning of 2023, it's clear that it behaves like a risky asset, such as equity, and not a safe haven investment, such as US Treasuries or gold. If you do include cryptocurrency ETNs in your portfolio, it's probably best to keep the allocation small, perhaps 1 to 5% of your total portfolio, and rebalance regularly. Is this suitable for you? Crypto ETPs are now accessible, but that doesn't mean they're appropriate for everyone. You'll need to pass a knowledge and appropriateness test, and you should only invest money you can afford to lose. I think they're best suited to experienced investors who already understand the risks of crypto volatility. One argument for holding a bit of cryptocurrency is that if you invest in each asset type according to its total value, that's kind of like market cap weighting, then digital assets would be just under 2% of the total universe of investable things, depending on which assets you include, of course. However, I don't think that the fact that an asset type is large in terms of market cap as a unique justification for holding it. There are lots of other considerations, such as its risk, correlation with existing assets in your portfolio, and so on. Just because something exists and it's big doesn't mean you have to own it. Personally, I treat it as a speculative satellite holding and not a core holding. So hopefully I've answered your questions about crypto ETNs in this video, and I found the process pretty straightforward. I think this is a really healthy development now that I can just hold crypto as I would any other investment on my investment platform, and I can buy it via a regulated exchange, which is a big step forward. But do tell me what you think in the comments. I'd be fascinated to see what your experience has been of this. And don't forget, you can learn more about those crypto ETNs from Wisdom Tree, the sponsor of today's video, and you'll find links to that in the description below. And, as always, thank you for listening.